the All Funds Investment Podcast explores those making investments in the alternative asset landscape, as well as the vendors who service these funds. We provide resources for emerging managers and insights for those in the alternative fund space. This podcast is for informational purposes only and should not be relied upon for investment decisions.
Welcome to the All Fun Investment Podcast. This is Mike Schroeder. Today we're with Zach Ziliak of Ziliak Law Group. Zach, thanks for joining us.
Thank you much for having me. Yes, thank you.
Absolutely. Thanks for being on. So just to start off the conversation, you mind just telling us a little bit about your background and, how'd you end up starting Ziliak Law Group?
Sure. Thanks, Mike. So law in general is a second act for me, a second career. I started out in finance. I went to grad school in math, and from there took a job as a quant, like one of those back office financial engineers, they say, at UBS, and spent some time as a quant and also as head trader for a while at a prop shop. So I come from a trading background. It was from there that I went to law school, clerked for a year on the DC circuit, was at a big law firm, Mayer Brown, for 6 years before leaving in 2013 to start this place. So we're in our 10th year now. Started out as a solo, and since then we've expanded. There are currently 11 attorneys and 4 other staff, so based here in Chicago.
Very cool. And what was that transition like for you? How did you go from math to legal?
Well, that's an interesting question. The math to finance, first of all, was a bit of a shift. Just instead of thinking about proving theorems and figuring things out in the abstract, to now, on a day-to-day basis, what is your profit? What is your loss? We need to calculate this particular answer. So that was a shift. But from there to the law, sure, you're solving different kinds of problems. It is a different community that is, what can I say? The demographics, the age, the goals in career tend to differ between finance and the law. But a lot of the legal work I was doing was for people in the financial industry. Certainly, since I've been here at Ziliak Law, that's been the case. But a lot of our work is for folks in the financial industry. So it's sort of like I've come home again. I'm not on that side of the fence, but I'm still in those same kinds of meetings, still thinking about the same kind of pricing and strategies and exchange issues, market microstructure and order types and such. So it's, yes, third verse, same as the first.
Yeah, very cool. And so tell us about all the services you guys offer. I know, you guys do the fund structure setup, dive into everything you guys are doing over at Ziliak.
Well, sure. So thank you very much. Let's see. On one end, so we've sort of grown into like a bipolar or a spectrum kind of model here. But on one side, we have financial services and blockchain. And on the other sort of extreme over here, we have entertainment and media and intellectual property. And then sitting in the middle, we have litigation and business and corporate. Let me explain that a little bit. I don't mean that every financial services client, like every trading client and such, trades digital assets or is otherwise involved in blockchain, nor is every blockchain company somehow dealing with finance. But there's a lot of overlap there, and they both sort of involve math and computers and money and so on, and regulations from similar entities. So these two, there's a lot of overlap in clientele, a lot of overlap in the services we provide. Likewise, over here, not every entertainment media client comes to us with an IP question. Not every intellectual property client is in the entertainment space, but there's a lot of overlap there. And then all those clients end up needing basic business and corporate work like company formation, contract negotiation, mergers and acquisitions, whatever, as well as when things go wrong, litigation. So we try in this middle to service those two ends. Now, we also will do general business and corporate or litigation work for other clients. It's just in practice, most of them come from one of those industries at the edges there.
Got it. Okay. So on the fund side, you guys are doing the fund setup, legal filings like that.
A lot of that. Side, that's right. So we do represent some existing funds. We do a lot of fund setup. So drafting their initial documents, doing their initial filings, getting them set up as investment advisors or commodity pool operators, commodity trading advisors, this kind of thing. So all the SEC and CFTC or FINRA and NFA kinds of registrations and memberships will help them with this, as well as disclosures, so private placement memoranda, disclosure documents, this kind of thing. The contracts they will need just to govern their own funds, as well as the agreements with the clients and such. So yes, we'll help them with that general setup. There are some structural issues that depend on tax and all kinds of things in terms of where their clients are based and what products they're trading, that affect what kinds of registrations are required. So we do a lot of that kind of work over on the fund side, as well as a little further afield on the blockchain side, whether it's token issuance or helping people with just pretty much anything that comes up in digital assets. We're doing a lot of things there.
Okay, that's very cool, and that's exactly what we want to dive into, some of that. So, what is the I guess from your perspective, what's the importance of having a lawyer, on the fund side, and even on for these ICOs? What are some of these guys looking at?
Sure. So on the fund side, first of all, this can sort of sneak up on you. You start out just managing your own money, and that's all fine. But then you decide to manage some friends and family money, and pretty soon people are paying you to do things, and lo and behold, you become a fund manager and haven't paid attention to it. Or also, maybe you know that you're managing a fund, but you just download some existing documents you find online and such. And the problem is, two different funds that differ by the product they hold or the kinds of strategies, how many investors there are, where the investors are located, where the managers are located, whether they have leverage, all kinds of things can change what regulations are required. Plus, the laws can change from year to year, so using old documents can put you on the wrong side of the law. Now, some of those documents are just required by various regulators, whereas a lot of the others are a matter of transferring risk. So you are warning your clients, your investors to be, that we are going to invest in a certain way that creates certain risks. You are taking on those risks. You think this is worth your while, that you're going to make profit because of what we're going to do. And then, but we tell you that these 17 things can go wrong. And if one of these things goes wrong, don't come and sue us because we warned you. You takes your money, you pays your chances. You pays your money, you takes your chances.
So this would be like the LPA or the PPM and limited partnership agreement and private placement memorandum for those.
Absolutely. This is very much the kind of thing we do. So those kinds of documents really protect you. Some of them are, again, required by regulators, required if you want to raise money, so sell interests to investors, required if you want to manage that money by investing in certain products, futures and other kinds of products, if you want to take on leverage. All these kinds of things implicate different regulations, and you can get in trouble if you don't make certain disclosures. Like you say, hey, I ran this strategy myself, I backtested for 5 years, I had great returns. Sure, you can reference backtests, but there's magic language you have to put around this, disclosures about all the various errors that can come up, how that can be biased. And if you don't get that, that can be just per se misleading. And then later on, someone could say, I never would have invested if I'd known this is only a back test, and then you're in trouble. So yes, running this by a lawyer definitely helps a great deal. Similarly, over on the ICO front, so people keep changing the names of token issuances, whether they're ICOs, IDOs, IEOs, whatever else, or people who say STOs, so security token offerings. But pick your favorite abbreviation. When you say you want to sell some new tokens, some new digital assets, that's great. Companies do it all the time. The thing is, they don't magically evade traditional laws, in particular securities laws, just because ownership of these tokens is recorded on a blockchain rather than a centralized ledger. So, they're useful. There are all kinds of good things that come from having a digital asset which has smart contracts tied in and all the rest. There's a reason it exists, but that reason is not to play fast and loose with existing laws. And so lawyers can help you figure out what kind of registration you need to sell these things, or if there's some way you can just slightly tweak the definition of your token, so the rights that it conveys, thereby keeping you outside of the definition of, let's say, a security, so it simplifies the issuance. Lawyers can help you with that whole thing.
Okay. With I guess on that note, because it's kind of interesting take, because we don't talk to a ton of lawyers that are doing this kind of type of setup for these funds or these token issuance. What kind of tokens are you guys working with? Are these like layer 1, layer 2s?
So we've been around for long enough that we've had a few different ones. You're right. A lot of them are built on top of the other ones. And so people come to us with different things. People have their governance tokens. They're launching more stable coins. They come to us with NFTs. They're doing various DeFi projects. We have people who raise money through SAFs. There are, just you name it, right? So a lot of, hey, could you write an opinion saying that this is not a security? Or, well, I acknowledge it's a security. How can we sell this thing? Or, well, because it's a security, I want to issue it outside the US. How do I ring fence this so that we can actually be in compliance with all the rules. Or we're looking to list this on this exchange and they want to see this and this about the token. So we do a lot of those kinds of things as well as just representing companies who have blockchain as part of their business proposition. It's not that they're so much issuing tokens, it's just how they track things itself on some distributed ledgers. We can help them with that as well.
Got it. Very cool. Tell us about, coming back to the fund side. What does it take to, what are some key factors that somebody should think about when they're setting up a fund? And do you guys work with onshore funds, offshore funds, funds of any sizes? Tell us a little bit about that as well.
So yes, we do work with both onshore and offshore funds, as well as groups that have master feeder structures. So 2 different front doors to the same fund. This is pretty common that when funds anticipate a lot of investors, both within the US and outside the US, that especially for tax purposes, but also for some other reasons, they will, as I was saying, give their investors 2 front doors. You can, at the end of the day, access the same trading strategy, but do you want to invest through this place that's, let's say, off in the Caymans, or to invest through this one sitting over in Delaware or something? And both, at the end of the day, invest in the same thing, but we make that available. So some purely offshore funds, some purely onshore funds, and some of both. A lot of the offshore funds, the purely offshore ones, I mean, some of that comes because of all of the exchanges for digital assets that don't invite US participation because of their own regulatory exposure. So some people say they want to trade perpetual futures or whatever else. They want to get access to particular exchanges that are very capable to stay outside the US, so they set up entities outside or partner with groups out there. So yes, we work with people across a wide range of geographies internationally, as well as, yes, sizes. So we've represented mutual funds, groups that have, hundreds of millions, if not billions, under management, as well as groups that are just starting out and hoping they get up to 5 million or something like this. So we're not above representing small folks, and the legal work required varies depending on just, are you going to have one fund or this master feeder structure? Do you want to sell to unaccredited investors? Or are you willing to limit yourself to accredited? How much money do you anticipate raising? What kinds of products are you going to invest in? Because the SEC takes an interest once you try to get investors to invest in your fund. Then the SEC or CFTC can get interested for different reasons based on the products that the fund actually trades. So there are other regulations you have to work around for that, as well as perhaps deals in other countries. So yes, we're happy to help with all of this, as well as just contracts with the investors, disclosures. And I think one of the things that separates us from other law firms in this area, I mean, it's still on my business card, it says law for traders from lawyers who trade. We hire people who have a background in this industry. As you heard, I'm in that category myself, as well as several of my colleagues, whether they are currently floor brokers or whether they have MBAs or masters in finance, they work at the SEC, people who understand this industry and hence are able to advise clients on industry best practices, operational risks, this kind of thing, not just strictly legal questions. We want to sit next to our clients, be partners to them to help them figure out what it takes, in this example, to run a fund. So we'll help them design their fee structure, sort of kick the tires on their strategy, as well as putting together the PPM and such. Those feed each other then, because understanding the strategy helps us to draft the strategy-specific risk disclosures that have to appear in the PPM.
Got it. That's awesome. And then when it comes to, specifically for like digital asset funds, what are some, concerns that some of these funds should be thinking about?
Right. I think we represented our first digital asset fund back in 2014, the launch of one, and we've been doing that pretty steadily since then. I mean, you can imagine there were fewer during the crypto winter. How busy we are in that space is directly correlated with recent returns on Bitcoin prices. When it goes up, everyone wants to launch one, and when it goes down, people lose interest. As far as what people need to pay attention to in the digital asset fund space in particular, first of all, as most people have probably heard, the regulation in this space is in flux. There is still debate over which things qualify as securities and all the rest. So the SEC and CFTC fight over, who has jurisdiction over things. And then the managers themselves say, I don't think this is one. There have been statements from the regulators, but not necessarily a lot of court cases to say officially the SEC and CFTC are right about this. The White House has come out with a proposed framework, but again, it's proposed. And until everything gets tested in court, it's a little bit up in the air. We have advice we give clients as to what kinds of things trigger likely SEC exposure so that they would want you register as investment advisors or fall within some kind of exemption. What kinds of things would, once again, trigger CFTC exposure so they would need to register as a commodity pool operator and the like. We can walk them through all of this. that can once again sneak up on you because you think these aren't stocks, these aren't commodity futures, I'm just buying futures on Bitcoin or something. Well, okay, but. So these fall often within those same kinds of areas that the SEC and CFTC try to regulate. And so we're here to help with all of that.
Yeah, I can see how complicated that can get very quickly. And so I think it's so interesting, the idea of you guys work with ICOs, the security tokens too. What are you guys seeing in that area, in terms of like, securities laws, how are regulators looking at these ICO projects? Are they, and like you mentioned, there's been different name changes, ICOs, ITOs. What does the future look like for this area?
So let's see. The Securities and Exchange Commission in the US, the SEC, has really taken a position that most of these tokens are securities. That said, you can certainly issue a token that avoids traditional characteristics of securities and thereby have it not be a security. So there are utility tokens. Now, people use utility tokens as shorthand for not security and just say if it has utility, then it's not a security. And that's not the case. It's not as simple as that. That is, if you have a token that conveys rights that have both security and non-security aspects, so the security side wins. You're going to end up being a security. But you can have one that is devoid of security style aspects and then have a pure non-security token. I would say that most of the futures and derivatives on most digital assets will fall within the jurisdiction of the Commodity Futures Trading Commission, the CFTC. That much is pretty likely in the US. But I think here's the thing. When people first started trading digital assets, when companies first started issuing tokens, there was a frenzy of, hey, because these don't fall within the definition, not the definition, but how we traditionally thought of various financial instruments, maybe these will not be subject to the same regulations that those traditional financial instruments are. And then it is becoming increasingly clear that, well, the mere question of where the ledger exists that tracks ownership of the assets is not that relevant to determine whether the underlying asset is itself a security or not, is itself some future other derivative on some other kind of commodity. It comes down to the rights conveyed by that token, and if those rights on a traditional instrument would implicate CFTC or SEC jurisdiction, you can anticipate that the same thing will be true even when ownership of those tokens is tracked on a blockchain. But that said, so that I think undercuts some of the initial frenzy of, hey, we want to get in these precisely because it's a legal workaround. No, it's not really a legal workaround, but there are technical benefits to this. That is, there's technological benefits to this. That again, with the tie into smart contracts and all the rest, and just the transparency that comes from blockchain, there are all kinds of benefits to issuing financial instruments through a blockchain fashion, so in digital assets opposed to traditional ways. I think we'll continue to see growth in this with more and more traditional companies, that is well-established ones, issuing more things on the block, just on chain.
Yep.
So I see a lot of growth there. Just now that we're past that initial idea of, hey, this is some sneaky way to get out of the law. No, not so much. But there are real financial and economic and technological benefits to doing it this way. So let's issue them this way. I think we'll see expansion into like greater exposure in terms of asset-backed tokens, like more real estate backed and backed by other assets.
Yeah,
it's all right there. And if we figure out ways to do this, you'll see, I think, continued growth in volume.
Yeah, that's really interesting. And in terms of, are you guys seeing anything, in the realm of like, I've definitely talked to a couple like investment DAOs out there. Are you guys seeing things like DAOs, tokenized funds, anything like that crossing your desk?
Yes, indeed. So first of all, in terms of DAOs, we get a lot of people wanting to form DAOs. Some people who already have DAOs who come to us. I mean, while there are jurisdictions like Wyoming that recognize DAOs as their own general form of business, I tend to think of a DAO not so much as a who, as more rather a how. That is, how does whatever entity it is or whatever wallet it is decide what to do? You can delegate that authority to a DAO, and the DAO is just like a voting mechanism and such. Now, the DAO can be reified in some kind of official entity if the jurisdiction recognizes the same, or you can just say that here is my LLC or whatever else, and it officially, by its operating agreement or whatever, says we will do what the DAO says. You can also have have individual agents agree on behalf of the DAO, on behalf of the LLC to do what the DAO says. So if you have to go through a person, some person has to move the money from a wallet. It's not just a smart contract and such. But you can still delegate that decision making over the DAO. And yes, a lot of people come to us with these. There are open questions on just in terms of liability, how DAOs can be sued, how they can sue, and if they do things, who is liable for this. Some people use this to try to stay outside of particular jurisdictions. But there's a question of, at the end of the day, who owns the wallet that carries these digital assets that are moved per the vote of the DAO, but still, who owns the contents of those wallets before they're moved around? That is the entity, or that is the person that is delegating authority to the DAO, and that entity, that owner, can still be responsible, at least it seems. Though again, some of this is still up being decided. In addition to the DAOs, you asked about one other thing. Tell me what the other one was.
Yes, the tokenized funds.
Tokenized funds, right. So people, when it comes to the intersection between our fund services and blockchain practices, they come up in two disparate ways. It can be a fund that invests in digital assets, so the tokens are the things held, or a fund ownership of which is tokenized. And we've seen a lot of these. There had been fewer of these, but we're starting to see more of these. We are seeing more tokenized funds. We have clients who like a tokenized real estate fund, as well as tokenized funds that themselves invest in other tokens. Why not? So a lot of the funds, even when they invest in digital assets, still use traditional kinds of documents and such. Part of that is they're limiting their investors to accredited investors and trying not to have a public issuance and such. And when they just open it, just the whole ethos of tokenizing something sort of suggests that all and sundry can invest. And now suddenly you're falling outside of the exemptions that people have previously used to steer clear of the obligations of the Securities Act. So you have to restrict ownership a certain way if you want to fall within those exemptions and greatly simplify your lives. So unless you're going to do a tokenized mutual fund, which is a whole separate issue, unless you're going to open it up intentionally to anyone to invest, retail investors and such, you can tokenize it. You just have to make sure with the exchange or wherever else it's listed that ownership is limited to the kinds of people and the locations where you're allowed to sell this and fall within that exemption. So that has slowed uptake of truly tokenized funds to some extent, but we definitely do see some.
Yeah. Yeah, I could totally see that, because even, the concept, you have this accredited investor, qualified investor, but then, okay, it's great, it's tokenized. So, the thought is, oh, I could sell this on the open market, assuming this traded in a NAV or whatever the case is. But obviously, whoever ends up on the other side of that trade, still has to agree to the LPA, sign the documents.
Yes, you can do a certain amount of that through DocuSign and the like, and all the rest. And yes, we do have token purchase agreements, so it's possible to have good documentation surrounding token ownership. But you're right, it's all that vetting of qualified or accredited status and such that goes along with this, and then making sure that these cannot be fractionalized. That if someone buys this and then sells it on further, then you have to make sure that we want to limit that, or at least make sure that the subsequent buyers likewise get vetted and agree to these things. So that does slow, again, adoption down somewhat, but all those technologies exist. You can do those things. And accordingly, we have people who are running tokenized funds now. Yeah,
definitely. I think we got to come back, and I think we could do a whole episode on some of these like legal requirements and different tokens, whatnot. Is there anything else, any interesting projects or things you guys are seeing right now that you're working on?
Let's see. We have a fair share of DeFi clients. So those are interesting, because it's always which jurisdiction has control over this and are you allowed to do this or not? So those are interesting. Companies that intentionally pick and choose all kinds of jurisdictions around the world, which is interesting for us lawyers to figure out. But no, and a fair number of NFTs that that sort of comes and goes, and how exciting people think that is, but I think there's a good opportunity there. I'm looking forward to seeing more bundled or hybrid issuances, so tokens that carry a wider range of rights, and I'm looking forward to seeing more exchanges. We've represented some folks that talk about starting exchanges. They haven't fully pulled the trigger on that yet. I'd like to see more products listed, including, again, futures and derivatives on basic digital assets. So, we are working with a lot of folks in this space, happy to do more of it, and, happy to hear whatever all your listeners are into.
Yeah, absolutely. Awesome. What advice would you give to a new fund that's entering the market right now?
Sure. Let's see. Are you speaking in particular about digital asset or crypto funds, or in funds in general now?
Funds in general, but we'll stick with crypto.
Sure. So, well, somewhat facetiously, I'm tempted to recommend that they call us, but there actually is a kernel of truth there, and that, hey, if we all offer a free consultation, maybe they learn everything they need and they walk from there, or maybe they realize we're just what they need and we're there to help them in the next level. So that's one thing. But more generally, so just, test drive your strategy like always before, whether you're paper trading it or back testing it or running your own money or whatever else. Traditionally, it took about 3 years of good returns to really pull in institutional investors and such. And that's still true for some investors, but especially with how quickly things change in the crypto space, that has been short-circuited to some extent. That now people are willing to invest after much shorter track records. Just the world is so different after 3 years, doesn't really tell you that much. Now, the cost of that is that such investors can be fickle. That is, you might have a great strategy, but then crypto winter Mark II arrives and everyone says, well, forget it. It's a different world. I'm not going to look back 3 months. Or, oh, blockchain is over. I don't need to do this anymore. So yes, you can launch your fund and find investors without having to run it for 3 years based on your own money. But you might find yourself with a perfectly good algorithm and suddenly no investors because just Bitcoin dropped 30%. I know that kind of thing. But right, like anything else, talk with your lawyers, talk with your fund administrators, make sure this all works. The whole infrastructure of running a fund, whether it's administrators, auditors, all these kinds of things. And now if you're doing a 506c issuance, if someone has to vet someone's accredited status, all these kinds of things exist, including the crypto space. Well, any kind of AML, KYC you want to do, I think people tend to skip over this because it's not necessarily in keeping with the whole decentralized ethos of why is the man looking after me? But you sort of have to do it. But fortunately, technologically, that exists. And whether it's through your lawyer or through whoever else, people can help you through this. And if at the end of the day, your strategy yields positive returns, people will beat a path to your door. It works.
Yeah, that's what it's all about. Awesome. Zach, thank you so much. This has been excellent. Where could people go to learn more about Ziliak Law Group and connect with you?
Well, great. Let's see. So my name again is Zach Ziliak. Last name is 6 letters, Ziliak. And the website, the URL is just, once again, ziliak.com, ziliak.com. And we do have a LinkedIn page, I think also a Facebook page we occasionally post on. We have Twitter and Instagram that we hardly ever do. I'll try to be better about that. But yes, the website says most of it. And you'll probably find my email address, at least on the website. Otherwise, it is just my name again. So Zachary@ziliak.com. You can find me there. And my colleagues, likewise, they're all on the website, and we can help you through a great number of things. Please do reach out.
Amazing. We'll put all that in the show description. And thank you so much, Zach.
Great. Thank you very much, Mike. Appreciate it.